Let's get it. What up, fam? Yo, I'm super excited to be on this call with you guys. Honestly, if you don't know me, my name's Jared. I've been involved with trading and entrepreneurship for the past 3 years now. And I honestly fell in love. This is something that I started just to find a way to make money because I didn't know how to make money. I was somebody that needed to clock in to make money. I didn't understand how to produce. So actually, the way I got introduced to this was I was actually in college playing ball, and one of my roommates, my brother Phil, he was actually trading off his phone, and I saw he was like $100 in profit or something, blue screens, and I'm like, yo, what's this, bro? Show me. I need to learn more about this, and I'm just super grateful for that day because I didn't understand how far this would really take me and the doors that it would open, right? This is a skill set. This is a specialized skill set that's going to allow you to take your finances into your own hands, right? That's very powerful, especially in today's day and age. A lot of things are happening in the world, and more people are, maybe forced to stay home or what I mean? Lives are changing. So what we have access to is a skill that's going to allow us to produce so we don't have to exchange our time for money. So I'm going to go ahead and I'm going to actually share my screen. I'm going to dive into it. Let me know if y'all can see my screen. Just go ahead and drop me some 111s in the chat if y'all can see my screen. But we're about to get to it, guys. I want to do a basic trading training when it comes to the skill set because I understand that we have a lot of new members on this team. We have a lot of new people in this organization, and honestly, the basics is where it's at, right? Because when you can understand and really master the basics, you'll be able to master anything. Okay, so what I'm gonna do is I'm gonna get real I'm gonna get real. I'm gonna try and break this down as much as I can for you guys, from as basic as possible. Now, when I first saw this chart, I didn't understand what it meant. I didn't understand what it was. I didn't understand what the candles meant. Right? I just saw a bunch of squiggly lines going up and down, and that was me. So I'm grateful for this academy because we really do have a solid top tier education when it comes to trading, when it comes to different strategies, different time frames, different the mindsets you got to have. Like, it's so in depth, it's going to really help you develop and become more of the person you want to be. So here we go. All right, guys. So it's important to note that when you hop on a chart, when you first look at a currency pair, the first thing you want to do is you want to zoom all the way out, right? It's kind of like science class. You're looking at a microscope. You want to get the full frame in focus, so now you're able to dive down deeper and deeper into the markets, right? So we're starting this from the top. We're gonna get really basic on you guys. We're gonna get into simple market structure. All right, market structure is basically how the market moves. This is the way I trade. I'm a price action trader. I'm somebody who trades off of certain levels in the market, and I take what the market gives me. I don't try to force it. I don't try to do too much. I honestly don't even trade that often. But when I do trade, it comes easy to me because my strategy is simple. All right. So, guys, I want to make this as simple for you as possible because I understand, trading could be overwhelming, but here we are. So, as you guys may know, right, the market is going to move up and down. But the thing about this market is you're taking one currency versus another, right? So, for example, here we're looking at the euro versus the US dollar. Now, there's a lot of factors that's going to come into play in terms of making this market move. If you get what I'm saying, right? You got two countries here. You got the United States and you got Europe, right? You got the interest rates, you got inflation, you got unemployment, you got all these political factors playing a role in both currencies, causing volatility in this market, right? Volatility is basically lots of movement, lots of uncertainty what's going to happen in this market. So here we see the euro and the US dollar, and it's looking like it's bouncing up and down, right? So let's get into basic market structure. When the market's in an uptrend, right? I'm sure you guys know it starts on a low, makes a new high, right? And from there, what's going to happen is we're going to see a pullback in the market. The market's going to start to retrace, right? Now, why does that happen? Couple of reasons. One, what goes up must come down, right? The market can't just go up forever. Two, I don't want to get too in depth, but we're going to talk a little bit about liquidity. We're going to talk a little bit about orders being filled and blocked. And we're also going to talk a little bit about certain areas or levels in the market, price action zones that have a lot of respect. And that's where you're able to see a lot of movement, right? So after that pullback, you're going to see another impulse move to the upside. Impulse just means uptrend or pushing to the upside, right? After that, you're going to see another higher low and higher high. Now, for those of you that might be a little bit confused on what that means, I'll break it to you real simple, right? We're starting off at the low point. We're starting on the bottom. We create the new high. Now, here's the higher low, all right? The higher low is important because this right here is confirming that the market's in an uptrend. Now, let's say it goes like this, boom, boom, and does a break of structure, right? That no longer is in an uptrend. So you want to understand market structure so you can identify what direction the market is trending, and you can also identify where to find your pullback zones to enter into the next impulse move, because you want to trade with the trend. You never want to trade against the trend. It's like trying to sell something that is going to go up in value, right? You're going to lose out. So you want to trade with the trend. The trend is your friend, right? So here we go, right? Higher high, higher low, new higher high, right? Because this high point is higher than this high point. And then our new higher low, we can confirm that just by seeing that this low point is still above this low point. So that's what the market is going to do when it's moving up. On the other hand, when the market is moving down, you're going to start at a high, make a new low, pulling back to the upside to make a higher low, new lower low, another higher low, another lower low. We can confirm, boom, okay? Starting off at the top, make a new low, boom, higher low, lower low, higher low, lower low. If this is making sense, just go ahead and drop some 222s in the chat. I'm just trying to break this down as simple and easy as I can. Saying we got people in the waiting room. I don't think we got people in the waiting room. But let's break this down. Let's keep getting to it. I want to dive really deep with you guys. So let's get it. All right. So boom. That's market structure when the market's moving up and when the market's moving down. Now the market's always also going to move sideways. Sideways movement in the market is called consolidation. And in consolidation zones, you're going to see a lot of up and down, side to side. This is what we call ranging motion in the market, right? It's not really going anywhere. It's just going left to right, right? So that's consolidation. Usually following consolidation, we see a break of structure, a retest, and then an impulse move. I don't want to get too heavy into that right yet. We're going to find some examples really quickly, and then we can get a little more advanced. All right, so I'm going to break down to you guys how I trade, what I look for in the markets, how I find my setups. So, boom. All right, we talked about price action. We talked a little bit about market structure. We know how the market moves. All right, we know how the market moves. Now what we got to do is we got to start to identify certain key points in the market. Now, the thing that I like about this website right here called TradingView is you have a lot of freedom. You have the ability to use multiple different tools and indicators, and you can make this thing your own. For me, I like to use trend lines. Simply put, right? A trend line is going to show you the direction that the market is moving, guys. There's no right or wrong way to mark up a chart. I mean, there's no right or wrong trend line, as you guys can see. It's all about what you think. It's all about what you see, because what I see might be a little bit different than what you see. All right, so we're on the monthly time zone. This is a very large time frame. I don't trade off this time frame. I just use this as like a reference so I can see where we are in space. All right, now I'm looking at something pretty interesting here. I'm seeing that from August 2000 to June 2008, we made a huge impulse move that covered up the majority of the market. So we're seeing right here, boom, the market right now is sitting at that 61.8 level. I don't want to get too in depth. I'm gonna just keep diving deep. All right, so we're on the monthly. Let's talk about the weekly now. All right, so now let's talk a little bit about candles. Okay, so keep in mind that whatever time frame you're on, the candles are gonna correspond. All right, so if I'm on a weekly time frame, each candle on this chart is gonna be an entire week long. Now, what does that mean? All right, cool. Let's dive a little bit deeper. I'll break this down slow, and then we're going to get really into it. We'll find some setups for the week. We'll be able to eat. But right now, we got to get that understanding. So this one candle right here, that's 1 week candle, right? 7 days. Now, if we break that down and we hop in on a daily time zone, we're going to see more and more of these candles in between that weekly time zone, because we know that 1 week is 7 days, which means that on the daily chart, that 1 weekly candle is 7 daily candles, which means that on the 4-hour, it's even more. You get what I'm saying? We're just diving down smaller and smaller and smaller, kind of like we're on a microscope, continuing to zoom in on the current market price, and we're going to take what the market's giving us. Hold on 1 second. Yep. I'm on this call right now, bro. I'm going to send you the link. Let me call you back. All right. All right, boom. All right. So let me delete this. All right, bet. So guys, this area that the market's in right here, that's looking like sideways movement to me. That's what consolidation is looking like. This is no directional trend. This is the market moving side to side, and this is ranging. So when you see this, when you see the market start to range, that's when you want to stay away. You don't want to trade in a ranging market. All right, so what am I going to do? I'm going to go back to the weekly, and I'm going to find my SRTs. All right, my SRTs. That's what we're going to talk about today. SRTs. Anybody know what SRTs is? Drop SRT in the chat if you know. If you know what SRT stand for, go ahead and drop that in the chat real quick. I see support, resistance, and what's the T? Trend lines. There we go. Alexa, you've been on it. Perfect. Support, resistance, trend lines. Right? So we drew out a little trend line right here, right? Right? This is kind of like a support trend line. Now, there's no right and wrong way to draw a trend line, but when you're drawing a trend line, you want to look for multiple confirmations on that trend line. So how do you know that it's a good trend line? You want to look for as many touches along this line as possible. Usually need around as many as 3 for you to confirm it as a valid trend. So here we go. We're starting there. That's 1 touch. We got 2 touches here. 3, 4, 5. However many touches that is, respecting the zone. We get more respect here, and we're also getting respect here. All right. So boom. That's our trend line there. Now, usually, typically, each time we get a touch on this trend line, we get a bullish impulse move. We have not seen the market break below this trend line yet. What would that look like? Now, if this market was going to break below the trend, we start to see it come back here, probably retest the trend, and then fall. But since we haven't seen that, that means long-term Euro USD is in an overall bullish market long-term on the weekly time zone, right? So now we can hop down to the daily time zone, and we can see that off the daily time zone, things are looking a little more closer. All right, so look, boom, bearish move in the market. You could call it a pullback, you could call it what you want, but this is looking like a downtrend. We're getting a confirmation off of the zone. And what it's looking like for me is it's looking like I want to take a potential idea for a buy. Would that make sense to you guys? Are you guys looking for a buy here, or are you looking for a sell? I'll tell you why I'm looking for a buy, because each time the market comes down into this area point around this trend line, it makes a move to the upside. It respects this trend line. This is kind of like a little support zone. Yeah, we'll get into that. We'll get into that. All right, so bet. Here we go now. All right, so we got our trend line. We got the confirmations. Let me just get these little circles out the way. You know, I don't like too much going on my chart. When I first got started trading, guys, like I had like a million different lines and charts and fib levels and all this crazy stuff, and I had analysis paralysis. I didn't even know what I was looking for. All right, so boom, what I'm gonna do now is I'm gonna look for areas of support and I'm gonna look for areas of resistance. All right, so resistance, we know resistance is the ceiling, right? We know support is the floor, right? For example, you know, I was a pretty bad kid growing up, and I was always the kid that used to play with things in the house that weren't meant to be in the house. So I remember one specific day, I grabbed a bouncy ball from one of them little 25-cent vending machines and started bouncing it in my house. And what happened? It was bouncing from the floor to the ceiling. It was bouncing off the floor, shooting up, bouncing off the ceiling, shooting down. So that's the way you want to look at the market. When it touches the floor, it's either going to have enough force to break through the floor and go down to the basement, or it's going to reverse off the floor and start making a push to the upside. Okay? Give me 1 second. Saying, let me see. Okay. No, there's nobody in the waiting room. There is no waiting room. All right, boom. So now let's talk support. All right, let's talk floors here. Let's talk support, right? I'm looking at this trend line as an area of support, but I'm looking at this zone here as also an area of support. Now, why am I looking at this area as a level of support? All right, pretty simple, pretty simple. When you're looking in the market, if you want to know what the market is going to do, you want to look left. So the market is going to tell you what it's going to do based off of what it's already done. So boom, right? We're looking for areas that this support zone is respected as a floor. So let's go back in time. Let's go all the way back to about here. All right, now, guys, it's not always the most perfect. Like, that's why I don't use lines on my chart. I'd rather use a zone, because as you can see, this is an area of interest in the market. The markets came into this zone plenty and plenty of times, and you can see that is acting as both a floor, and a ceiling. You see the wick push through, right? That's showing us that this is now a ceiling in this instance. Market pushes down, starts accumulating, getting a little more momentum. Now we see the market start to break and retest, and now test this off as a floor, right? And we can see here, keep going. It's testing as a floor, testing as a floor, testing as a floor, testing as a floor. Oh no, it breaks the floor. What happens when the floor gets broken? When the floor gets broken here, we see it's testing as resistance, now testing as a ceiling, testing as a floor, testing as a ceiling, 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 breaks through the ceiling, still the ceiling, right? Market takes a huge push to the upside, breaks through the ceiling completely. Now the market falls, starts to accumulate, breaks through, break and retest. Now it's testing off as a floor, and I think this is going to continue to test off as a floor. If y'all with me, go ahead and throw some ones in the chat. This is making sense. I'm not really trying to get too much into the trade idea itself. I just want to get into the psychology to help you guys see what I'm seeing, so you can understand what the market's going to do, right? Because trading is one of those things where it's kind of like muscle memory. You know, it's kind of like lifting in the gym. It's kind of like, you know, you got to train your eye to see certain things, right? Because the first time I looked at a chart, I couldn't tell you what a break and retest was. I couldn't tell you a price action zone that was tested as both support and resistance. But guys, it's pretty simple. You know what I'm saying? Like, I'm sure you guys are going to be able to, after this call, you're going to be able to mark up these charts like nothing, right? But it's important to note that if you really want to master this skill, if you really want to become a successful trader and pull money out this market, you're going to have to put in that time solo on the charts. Now, don't get me wrong, it's good to have someone else's opinion with you, but you don't want to adopt the opinion of others when it comes to trading. You want to have your own psychology. You want to have your own strategy, because at the end of the day, it's only you clicking that button, right? So it's important to be self-sufficient, guys. I would highly recommend, spending hours on these charts, really breaking it down, getting in depth. I don't want to get too much into the strategies today. I want to get really basic into the candlesticks, the market structure, the trends, right? Because that's very important. But okay, cool. So now let's take it down a little bit further. We're still zooming in, right? We're still zooming in. So now what I could do is I could use one of my favorite tools from the market. Now, this tool that I like to use is called a Fibonacci retracement tool. Has anybody ever heard of a Fibonacci retracement tool? Well, the Fibonacci retracement tool is super handy because what that does is it's going to map out the market and it's going to show you certain key levels and areas of interest, right? So what does that mean, right? What is the Fibonacci? Like, what is the area of interest? What is the key level? What are we even looking for here, right? Let's backtrack real quick. All right, let's take a look back, right? We're looking at Euro USD. We see that we have this trend line, which is acting as support when we're also coming off of this support zone. Area of interest in the market, price action zone. Price reacts off of the zone often. It's testing as a floor, it's testing as a ceiling. It's testing as a floor, it's testing as a ceiling. Okay, we know that. Cool. So what is this Fibonacci retracement tool even going to do? Okay, so the way that I use it is pretty simple. You're going to retrace the market and what it's done. So boom, in this situation, right? In this situation, we're coming off of this bearish move right here. We're looking at this bearish move in the market, right? The market just dipped all the way from there to there. From January 2021 till now, we've been in a bearish cycle for a whole year, bearish. That's super exciting to me because I'm thinking bullish now, super bullish now. We're testing as support. We got a nice trend line that we're bouncing off of. Now I'm thinking we're about to start gaining some momentum to the upside, right? Bullish is upwards. When you think of bullish and bearish, bull, the horns is going up. Like if you ever seen those videos of people running in the street with the bull, when the bull goes to hit you, it's going to try to hit you. Like it's going to try to spike you. You know what I'm saying? It's going to spike up, right? Bullish, horns go up. Bearish is the opposite. Bears stay close to the ground. You know what I'm saying? Like bear, like you don't want to be bearish, really, especially with crypto. Bullish. All right. Now we can get into a little bit of risk management. But one thing I want to look for here is I'm not about to just hop into this trade. Right now, we're going to talk a little bit about risk management here. So the market is currently here, and there's different types of trades that we're able to execute in the market. If you know the different types of trades that you're able to execute in the market, go ahead and drop them in the chat box. I'm going to give you a hint. The first one is called market execution, and there's two other types of trades that you can place on your MetaTrader app. So if you know those, go ahead and type those in the chat real quick. I'm going to give you a hint. The first one is called market execution, right? And here we go. Limits or orders. Exactly. We got buy limits, we got sell limits, and we got buy stops, and we got sell stops. So there's different types of trades that you can take in any scenario. You can do a market execution, instantly hop in the market, or you can wait. So let's do a little example here. We think that the market is going to go up. Okay, so let's talk a little bit about the fib level. The fib, we retrace this bearish momentum from high to low. Okay, now we're able to see key markets, right? This 50% zone is smack dab in the middle of that whole zone that we just drew out. 50% is 50%. Just keep that in mind, right? It's math. It's the halfway point, right in the middle. All right. Now the sweet spot that you're going to look for is anywhere between the 38.2 and the 61.8 zone, right? Now we know that this is a bearish move, a downtrending move. We're looking for a pullback and a break of structure to the upside. So what does that mean? For us to confirm that this is a bullish market, for us to be in a bullish cycle, for us to be in an uptrend, what needs to happen is this level right here, this last higher low must be broken and now testing as support. Okay, so what would that look like? What would that look like? I don't want to get too ahead of myself. I don't want to go too fast. Hopefully you guys are able to keep up with me. If I'm moving at the right pace, go ahead and type the right pace in the chat. We'll keep it moving. All right. But for me to see that this is a break of structure, we're going to need to see the market push up, break through this level. It's probably going to come, somewhere to this 50%. Then we're going to need to see the market break through, break this new lower high, retest as support, break and retest, and now boom. That's how the market works. Now this doesn't just happen. It takes time, right? We're on a daily time zone, but this is just the basics, guys. This is just the basics. Now I want to talk a little bit about the trading orders, the different types of trades that you're able to place in the market at any given time. All right, so cool. Here we go. First type of trade we can place is called a market execution. We can instantly hop in the market right now, right? So let's say we're looking to catch a trade right here. All right. So currently this trade, we're still in a daily time zone. But if we want to instantly enter into this market, we would have to account for all this drawdown back to this support zone. Now, I don't like trading when I'm not at the floor or when I'm not at the ceiling. Why? Why would I try to take a trade in no man's land? Why would I try to take a trade in the middle of the zone? Why not try to take the trade from the floor or from the ceiling? Now, this is where patience comes into play, right? This is where patience comes into play. And this is super key, guys, because I want you to understand that when you get to trading, when you load up your account, like you're going to get that trigger finger starting to itch. You're going to want to get into trades. You're going to want to make money. You're going to want to see a blue screen. You're going to want to make money, but you got to be patient. You got to play your game because the market is meant to take your money. The market's not meant to make you rich. There's a reason why only 5% of traders are successful. Like out of everyone I know that has ever traded, there's a small percentage of them who are consistently profitable. And why is that? It's because of psychology. It's because of the rules that they set for themselves. It's because of the non-negotiables, the confirmations. There's certain things that I need to see for me to take a trade. So just because my boy Renee sends me a trade alert doesn't mean I'm just going to go hop in that trade. I'm going to have to do my own research for myself. Even when we get a swipe coin trade or we get a steady trade or we get a gold cup trade, I'm not going to just instantly hop into that trade without doing my own research first. So keep that in mind, guys, right? Just make sure you do your own analysis on every single setup, guys. You want to be disciplined, right? We're here to learn a skill that's going to set us free. We're not here to just gamble. You know what I'm saying? We're not here to just make a quick couple of $1,000s and then go back to our normal lives in the matrix. Like, no, we're here to tap out. We're here to break free. We're here to do things differently and create a different path for our families, right? We're here to print money out this market long term. We want to stay in the game. So cool. So cool. right? So we got the person who hops into the trade right away, and we got the person that plays it a little more patient. Both our stop losses are at the same point, and we're still shooting for the same target of that 50% zone. All right. Now, here's where risk management comes into play. On this trade, my risk to reward ratio is 1.8. So I'm risking $100 to gain 180, or I'm risking $10 to gain 18. That's not the best odds. Like, when it comes to trading, you want to risk at least 1 to 3. So if you're risking $30 on the trade, bare minimum profit, you got to walk away with 90. We're here to play a probability game. Now, why is risk management so key? Why does this stuff matter? Boom. 1 to 3, always. Why? Let's say I have $100 in my trading account in MT4. Boom. You got $100 in your account. The first trade you want to drop is a micro lot, 0.01 lot size. That's 10 cents per pip. Okay, that's 10 cents per pip. So let's talk here. All right, boom. So let's say this trade here. Let's say we hop into this trade on a micro lot. Okay. Our stop loss is 236 pips. Guys, we're on a large time frame, so you know what I'm saying? Like, this is obviously not the best example, but let's just look at the risk to reward. Let's not count the amount of pips. We're 1 to 8 here. We're 1.8 here. So we're risking $1 to gain $1.80. Not the best odds. Now, the person who was a little more patient, the person who played by the rules, the person that waited for this market to come back, sweep the low, maybe check for liquidity, maybe come back to the support zone, right? The person who's patient, their trade is now 5 to 1. So this person with $100 in their trading account, they're risking 5% of their account. They're risking $5 to gain 6. Not the best. The person that's a little more patient is also risking 5, but they're going to gain that 25. A little bit smarter, a little more patient, but that's the game you want to play. You want to be the patient. You don't want to be that person that's just trigger happy and jumps in these markets. So let's just continue to dive a little bit deeper. We're going to continue to go down deeper on these time frames, and we're going to get into this. We're going to get into the nitty gritty. All right. So from the daily, we'll drop down to the 4-hour. On the 4-hour time zone, we can see that we're in a ranging market right now. So I don't want to trade right here. Right. But what am I looking for? For me to want to get into this market, I'm going to need to see another break and retest. Guys, break and retest is like the most simple strategy that's going to make you a lot of money. You don't got to do much. You just got to be patient, because I'm telling you, this market is gaining momentum. It's accumulating. It's capturing liquidity. It's taking out people's orders. It's moving so it can set up for the next big move. Remember, guys, it's been selling off for a whole entire year. This currency pair has been selling since January 2021. Made sort of a little bit of a double top, came back up, tested resistance a couple of times. We can see we got a huge resistance zone in this area. Boom. Continue to just drop. Now, what am I going to look for to get into this buy? Couple things. Yeah, live to trade another day. Exactly. I'm going to look for a couple things for me to get into this trade. Now, first, I want to see a break and retest. I want to see this market push, break through this little resistance zone, come back down, test it as support, and continue to shoot. This right here is an area of resistance in the market. This zone here is acting as a ceiling. We can see that each time the market comes into that zone, it falls back down. It rejects the ceiling. All right, make this red because You know, there we go. It's red. Boom. That's our resistance level. That's our ceiling. I want to see this ceiling testing as a floor for me to take that trade. I'm not taking that trade until I see this ceiling testing as the floor. Or the market is either going to do that or it's going to continue to push, reject off the floor, drop back down, reject off the ceiling, drop back down to the floor, maybe take out these lows, and now I can take that same setup again. So there's two different types of trades I'm looking for here. I know the market's moving up. I don't want to take it in a bearish move. I'm looking for the break of structure. I'm either looking to take it off the break and retest here, right? I'm probably going to have, good 30, 25 pip stop loss, right? I don't like doing more than like 30 pip stops. Or I'm going to be a little more patient and I'm going to wait for the market to do its thing down here, right? And I'm still looking to ride this thing all the way back up. Again, 24, 25 pip stop, low risk, high reward. All right, so let me just get these out of here real quick. Boom. So that's what I'm looking for here. Now we can break it down on a smaller time frame. You can continue to break it down and break it down and break it down because the market is going to continue to do the same thing over and over and over, just on a smaller time frame. All right, if y'all still with me, go ahead and light the chat box up. If y'all still with me, it's getting a little quiet over here. I'm seeing some crickets. All right, but that's that, guys. Risk management is super, super key. Like, risk management is the one thing that's going to keep you in the game. Like, guys, we're here to protect our capital. We're here to take the money that we have and turn it into more. We're not here to gamble, right? You want to be smart, you want to be strategic. Each trade that you get into, you want to have a plan, right? You want to already know what's going to happen with that trade before you even enter that trade. All right. So that's why risk management is key. All right, so let's talk a little bit more about risk management. I mean, I feel like we can't even really stress that enough. That's something I really wish I knew early into the game. Like, I was just jumping into the markets. Like, I didn't know any of this stuff. All right, risk management. All right, we're gonna put down like 5 rules, 5 keys to risk management. All right, 5 keys. 1, 2, 3, 4, 5. Boom. Key number 1, always have a plan. Always have a plan. You got to know what you're looking for. 2, at least 3 to 1. We went over that already, right? 3 to 1. So that means if I'm risking 30, I got to gain 90. Bare minimum, no questions asked. My markup is 3 to 1 at least. Okay. Number 3, maximum 5% of your account risk. All right, per trade. Okay, so if you have $100 in your account, you shouldn't be taking more than $5 losses at a time for new beginners, right? If you're a little more advanced, there's a certain thing as not really over leveraging, just upping your lot size with a still proper risk management of keeping a short, tight stop loss. I don't want to get too much into that because, this is basics, guys. But you really only want to risk 5% of your account per trade. Why? Safety. Let's be real. None of us here are experts yet. We're practicing. We're here to compound our income. So that risk, if you're risking 5% of your account in one trade, your reward is 15%, 3 to 1, or 20% if it's 4 to 1, or 25% if it's 5 to 1. So that $5 potential loss is a $15 to $20 to $25 potential gain on a $100 account. You just added a quarter of your account to your balance, right? We're here to play the long-term game. We're here to compound our income. All right, so steps some 5 keys. Number 1, always have a plan. 2, at least 3 to 1. 3, maximum of 5% risk per trade. 4, all right, now this one is key because, this sometimes, we get emotional when we're in the markets, right? I'm guilty myself. Sometimes you get into a trade and you don't use risk management. You hop into a crypto trade or something, or indices trade, and you might not have realized how hefty those pairs are, and you don't have an exit strategy. You don't have a plan. All right. Number 4, stick to the plan. Stick to the plan. It's super easy to modify your stop loss. Oh, my stop loss is about to hit. I'm about to lose 20 bucks. Let me move my stop loss another 10 pips further. Now you just completely messed up your risk management because you're allowing for more risk than reward. So if I'm going into a trade and I'm risking 30 and I'm gaining 120, and I see, the market's not going in my direction, and now I'm negative 25, negative 26, negative 27, I'm not about to delete my stop loss. I'm not about to move my stop loss. I'm going to sit there and take that L, because, guys, you have to take L's. You got to get comfortable taking L's. Like, I don't think you understand that you need to lose to win. You need to lose to win. Look at Steph Curry, for example. The greatest three-point shooter of all time, one of the greatest basketball players of all time, one of the greatest shooters of all time. Let's Google his percentage. Steph Curry shooting percentage all time. He's at 47%. So 6 out of 10 shots he shoots, he's missing. 6 out of 10 trades I take, I might lose. But I'm using proper risk management. All right, so I'm going to give you guys an example. Let me grab my charger real quick, and I'm going to give you guys an example. Give me 2 seconds. Looking for my charger, guys. I think it's upstairs. All right, stick to the plan. Okay, so let's do a little example. All right, let's do a little example. We're going to take 5 trades on $100 account. Each trade we're risking, each trade risk is 3 to 1. All right, we're risking 5% each time. Risk 5% each trade to gain 15%. We're taking 5 trades, $100. Trade 1, trade 2, trade 3, trade 4, trade 5. Okay. Trade 1, we lost. -5. Balance. Our balance is now $95. No big deal. Trade 2, loss. -5. Our balance is $90. Trade 3, we lost. Again, trades ain't hitting this week. It's all right. All right. -5. Balance is 85. Right, so we lost 15% of our account. Trade 4. Trade 4 is a win. Plus 15. Our balance is now back at $100. So it's not about how many times you win. It's about how many times you're going to lose. Because if you can get comfortable losing the right way, you're going to put yourself right on track to where you need to be. So that's why it's important to have a plan. When you load up your MetaTrader account with $100, $50, $200, even $1,000, you got to have a set plan. You got to understand how much you're risking to gain. All right. So it's that simple, guys. Like you could lose 3 trades in a row, trade 4 with proper risk management, you'll win it back, and now you're back in the blue. All right. Trade 5, we're on a hot streak, we win another plus 15%. Right. Our balance is now $115. Right. So you can lose more than you gain. Risk management is what's going to keep you in the game. That's what's going to keep your money where it needs to be. All right. So I don't want to get too much into it. I don't want to dive too deep. I mean, this is something that I feel like I'm going to do on a nightly, weekly basis. I got some special guests hopping on the line with me this week. We're going to be going over multiple different strategies and ways that other people see the markets and, different products that we use. But today I wanted to really dive deep into the basics to help you guys get a more solid understanding. All right. So 5 keys to risk management: have a plan, at least 3 to 1, maximum 5% risk per trade, stick to the plan. And lastly, you got to pay yourself. Guys, you got to pay yourself. Like, I can't tell you how many times I've personally been in a trade that was in a great amount of profit. I mean, more money than I would normally make in a week at my job. More money that would cover the bills, right? But I was greedy. I wanted more. I wasn't grateful for the win. So I lost it. I didn't close out the trade. I didn't withdraw and pay myself. Like, guys, if you're making money, pay yourself. If you're up $100 and you got some things to handle, take that money out the market. Like, that money's not yours until it leaves your trading account and hits your bank account. You get what I'm saying? So it's very important to pay yourself periodically through this process. Guys, my whole first year trading, I didn't make a single withdrawal. I was like negative $2,000. And that was in $100 increments. Like, that was all my money. Like, I was struggling, guys. Like, I don't want you to have to go through that, because I don't think most of y'all would make it if y'all had to go through that for a year, to be real. But hey, I saw the vision, right? So make sure that when you are up, when you do get that profit, make sure you withdraw, put it in your crypto account. Obviously, don't put in the bank because they're going to tax it, right? But keep that money in crypto or USD Tether or, USD coin, a stable coin that's going to hold its value if you're not someone that wants to leave it up to chance with the volatility of Bitcoin or other cryptos, right? So there's smart, safe ways to invest your profit, all right? But yeah, guys, so we've been on here for about 50 minutes or so. We really only got down to the 1 hour time frame. Like, we haven't even really dove deep, guys. Like, this is like as basic as I could make it, and we've been on here for almost an hour. So I really recommend that we all just stay on it, guys. Like, this skill will really pay us. Like, this is a specialized skill set, guys. Like, I don't know if you guys know it, but AI is taking over. Like, people are losing their jobs to robots. Like, McDonald's doesn't even have cashiers as much anymore. Like, you just click the little big old iPad thing. So times are changing, right? People are going to have to resort to personalized skills. And the fact that we have access to a platform that teaches us how to trade, like, we got to take advantage of it. We really do. We really do. Right? So, guys, for the new members on this call, all right, I want to talk a little bit about the platform and some of the educators we have. Abel Melendez is somebody who I was able to use when I was first learning. He breaks it down so simple. He makes it really smooth for you guys. Abel Melendez, he's on Go Live under FRX Basics, right? And another one of my favorite educators is Nick Gomez. He does a really good price action boot camp when it comes to how the market moves, and especially with cryptocurrency. I started off trading Forex, but I moved over to crypto when I saw the profitability and when I saw how the market moved. It just made sense for me. So, everyone's going to have their own style. Everyone's going to have their own swag. Everyone's going to have their own type of stuff that they look for, but the fundamentals stay the same. It's important to have that solid background information that we get from the 100 series, 200 series, all the way up to the 400 plus series, right? So really become a student, guys. Really become a student. You just enroll to the Harvard or Yale of trading, and the price is only $200 a month. Like, college is way more expensive, and you're not even learning real life stuff that's gonna make you money. Like, let's be real here. Like, we got something good, so let's use it, guys. So that's it from me for tonight. I really appreciate all you guys for staying on the line with me. Hopefully you guys got some sauce. Hopefully you guys learned something. We're gonna be back tomorrow night at midnight. I'm bringing up a special guest on the call. We're gonna do things a little bit differently, but I'm super excited. I'm grateful. I love all you guys. You know, I wish you guys all the best. I hope you guys have a really profitable week and year, guys. Like, honestly, my biggest advice to you is to be here a year from now, because a year from now, you're going to make it through your first year of that trial run. You're going to look back on the wins. You're going to look back on the losses. You're going to look back on the sleepless nights, and you're going to thank yourself for keeping going, because trust me, you know, down the line, you're going to see a lot of success. So don't sell yourself short. You know, you never know how close you actually are to your goals. So let's keep pushing, guys. I'm going to catch you guys on the flip side. This was Call is Fire. I'm super excited. I'm actually gonna upload it to YouTube, so stay tuned to that. You know, if you missed it, if you know someone that missed this, you know, you can definitely get them on there on YouTube. Everyone, just go ahead and shoot me a follow on the gram. I follow back. Don't worry. Pretty cool guy. You know, I like to, you know, chat it up and stuff. But yeah, guys. So that's it for me. My Instagram's right there. Stay on the lookout for this being dropped on YouTube. And we're about to run it up, guys. So I appreciate you all. Love you all. Let's get to it, guys. Have a good night.